Since its inception, I&M Foundation has championed impactful initiatives around three key pillars: education and skills development, economic empowerment, and environmental conservation.
The Kenya Forest Service, in partnership with I&M Foundation, is fencing 695.3 hectares sanctuary block of the Ngong Forest. Our goal is not to build a boundary, but to create a secure space for conservation and to ensure that local communities can continue benefiting in a very responsible way.
We firmly believe that lasting impact is only possible through collaboration. That is why we are incredibly proud to partner with KFS, an institution whose unwavering dedication to conservation and reforestation is truly commendable.
We have now over 60 branches in 22 counties across Kenya. So we're well positioned to support the government in their desire to accelerate sustainability goals.
I&M, the future. Mbali tumetoka na bado tunasonga, kote tumeenea. The future is ours, tuanzishe mapya kwa wazo na ndoto, tumefanikiwa. I&M, the future, doing good, bega kwa bega, shoulder to shoulder, steadily we grow. I&M, the future, doing good. I&M, the future, steadily we grow. Now and the future, bado tunasonga. I&M, the future,
Celebrating 50 years of our past and inspiring our future. I&M Bank.
Hello, everybody. Hello, everybody. If you can hear my voice, give me a wave. Good morning. All right. We'd like to start, so if you're outside, please bring your plate in. Coffee is being served at the tables by the servers who are wearing black and white. We'd like to start. The directors, management, staff of I&M Group PLC, I&M Bank Kenya, Rwanda, Uganda, Tanzania, and Bank One Mauritius, members of the Fourth Estate, ladies and gentlemen, both here and joining us online, Karibuni. It is my great pleasure to wish you a good morning and to welcome you to the presentation of our full year 2024 financial results as we work towards being East Africa's leading financial partner for growth. Now, just a few housekeeping notes. The bathrooms are down this hallway to the left and then left again after the staircase. For those who are joining us virtually, please make use of our chat section, and we will try our best to accommodate all of your questions and comments. Now, may I please request that we be upstanding for the national anthem and that of the East African community. Thank you. Cue anthem, please.
Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
You may please have your seats. At this juncture, I'd like to welcome Mr. Kehara Maina, our Regional CEO for I&M Group PLC, to talk us through the progress that the group has made in delivering on our third iteration of the Imara strategy. Karibu sana, Mr. Kehara.
Thank you, Karanja, and good morning, everybody. Good to see you all here, bright and early, in what's really a historic venue. We are listed on the exchange, and just across here is where actually the exchange really used to trade. So good selection, Karanja. So I'll start by just recapping for all present what our regional footprint looks like. So as you are aware, we are present in 5 countries. So Kenya being our home country, and Tanzania, Uganda, Rwanda, and Mauritius. Across that footprint, we've got a network of 107 branches, 143 ATMs, over 700,000 customers, 3,200 plus staff, and over 5,000 shareholders, some of whom are present here as well. So Karanja mentioned that we are on our third iteration of our strategy, which we call Imara. And I'll just recap. I'm sure by now you're familiar with this graphic, which captures our strategy really on a page. So we reiterate our long-term ambition to be Eastern Africa's leading financial partner for growth. And that's, I always stress the eastern part, so that even though you've seen that our footprint is East Africa mainly, we are very aware that a lot of our clients are also coming from contiguous countries to that. So it keeps our minds open about what opportunities we have out there. In terms of our impact objectives, we are looking through this plan period to impact over 10 million lives. We are looking to do this, of course, through maintaining our customer experience at above 70% on our NPS, or Net Promoter Score, and a key part of our strategy on the digital side to make sure that our customers are digitally active. To do this, we are participating in 3 particular areas. We have a long history of leadership in the corporate and commercial space, and we want to continue entrenching our leadership in that space. That's our first pillar. We recognize the opportunity to grow that comes from the MSME space and the retail space, and we want to build relevance in those emerging customer segments, and to really make sure that we are entrenched in the various ecosystems in which we are operating. We also want to become a leader in those ecosystems. So to facilitate that and enable that, we are investing in brand relevance, in ensuring we unlock our group synergies. Resilience is important for organizations like ours, and we continue to invest heavily in that space. I've talked about digitization, and what really enables it is our people, and we want to make sure that we have the right culture to make sure we deliver this strategy. A key focus area is embedding sustainability across our business and the value chain to positively impact stakeholders and leverage the I&M Foundation to further our sustainability initiatives. And you will see the 9 different SDGs that we are particularly focused on. So to expand on this a bit, you will see the pillars that I just mentioned on the left over there, and what the 2026 aspirations for us are. We're looking at getting returns on equity above 20%. We want our customers to be digitally active, and we want more than 90% of those customers to be digitally active. the Net Promoter Score above 70%. Those 700,000 plus customers, we want to get to more than 1 million, and we want to be known as the best bank for employee experience. I've talked about the target to impact 10 million lives by the end of 2026. So how are we doing on our strategy? Year one was last year, 2024, and we're just highlighting a few things that we felt went well last year. So from an impact perspective, well on the way to the target. Our first year at 6.3 million customers, and this is the 700,000 plus direct customers and the 5.6 million that we are also impacting through our ecosystem partners. If you look at the customer numbers, really good growth from 2023 through to 2024. The NPS that I mentioned at 75%, up from 71%, and digitally active customers also making good progress towards our target at 83%. We have put on quite an increase in our staff in that period, over 400 staff. And it is really commendable that they have remained highly engaged at 78% year on year, which tells us that to be able to deliver the strategy, we have people who are on the bus making sure that we deliver for our customers and stakeholders. In terms of the revenue contribution from all the new business lines that we are focusing on, we have seen an uptick in that. The previous year was at 22% coming from new business written, and in 2024 that's now at 25%. The subsidiaries, other than Kenya, which is our key business, the contribution moving up from 24% to 29%. And our ROE also ticked up at 17% from 15% in 2023. I've just been told that we beat investor expectations with our dividend per share, so up from 255 in 2023 to a full final dividend of a full dividend of 3 shillings for the full year. So that comes after the 1 shilling 30 cents that we did as an interim dividend, paid I think in January, and we're looking to do a final dividend then of 1 shilling and 70 cents to make a total of 3. Moving on to how we have performed across our various geographies. So I've mentioned that we did 29% contribution coming in from our various subsidiaries. But a key focus, and we talked earlier about unlocking group synergies, is how much business we are generating from our cross-border flows. And we recorded $6 million worth of revenue coming in from this closer interaction with or within the group, and that was up by 57%. In terms of the progression over the years, you will see on the chart on the right that we've moved progressively from 14% through to 29%, and are looking to grow that even further. The charts below then show how that has happened for each individual country, and you will see that each country has ticked up, other than, of course, Bank One and Kenya, who have reported or ceded some of that share. Now, we talked about our first pillar, which was developing leadership in our core segment, which is corporate and institutional banking. I've talked about the cross-border business revenue that we've been tracking, but we've also been looking at new areas where we are targeting growth to come from. This includes our oil and gas sector. We are now, as at 2024, we are reporting in the oil and gas sector in Kenya in particular. We have been the second bank in that space, from literally not being a big participant just 3 years ago. So that is really good. We've been focusing on the public sector as well, looking at the China corridor and how we can support our customers who are operating in that space, and also looking at leasing business. So these target growth areas have contributed over 20% of our segment's operating income. If we look at the different segment expansion results then shown over there, you will see that operating income was up 12% year on year, and this was driven by new customer acquisitions in this segment areas that we are focusing on, and also our approach to optimizing wallet share and our improved transactional banking capabilities, which I'm sure Gul will touch on when we come to the Kenya presentation. While we are reporting a relatively flat customer deposit base, that's really because we have also seen that the Kenya shilling has remained strong against the other currencies of the countries where we are operating. And while they grew in their local currency, we saw that when you translate that into Kenya shillings, that has resulted in a flat outcome. So in terms of net loans and advances, this declined during the period. And I think we can appreciate that the operating environment that we had didn't really encourage customers to really invest, given the high costs of borrowing. Thankfully, those are coming down, and we expect to see an uplift in that. Moving on to our second pillar, which is building our relevance in emerging customer segment, retail and business banking. This performed very well with 30% growth in our customer numbers. And in terms of really getting the scale and relevance that we are seeking in this space, we saw a contribution of 88% revenue growth in the MSME segment. That, of course, has been complemented by improvement in our digital channels. We are at 107 branches from just 84 the previous year, and over 143 ATMs from 123 the year before. Now, we need to obviously get even more engaged with our customers. We've been delivering our servicing for clients through digital channels, but it is obviously important that we remain relevant by extending our branch network, which is what we are calling phygital experiences here. But you can see the focus that we have on service availability at 99%, and our transaction success rate again at 99% has really been important in making sure that we entrench ourselves in this emerging segment. And this is an area we want to continue growing. So in terms of the numbers, the results from that focus on the segment in retail and business banking, 26% growth in operating income, and that's driven by growth in customer numbers, the distribution channels that I just discussed, and of course, enhancing our brand. Another comment that I've just recently had before we started, which is good. In terms of the net loans and advances, so again, a decline driven again by some currency impact. While the number may be showing a decline in Kenya, we will unpack that a bit more. It's also because we have seen some of the products that we are rolling out actually showing significant disbursements despite the number relatively staying flat. The subsidiaries, however, saw growth in the retail and business banking loan portfolio in local currency. The Kenya shilling story then remains, as we had discussed, impacting the translation. In the third pillar, which is becoming a leader in ecosystems, we looked at the 5.6 million lives impacted directly through our ecosystem partnerships. In terms of contributing to operating income, that was 5%. And if we look at the amount of disbursements we've made in terms of loans through our ecosystem partners, who are largely mobile telcos and other fintechs, we have seen over 1.7 billion shillings on average being disbursed through these partnerships. So over 2.6 billion shillings contributed then to group operating income, which has been driven by the enhancement of the ecosystem networks, and over 3 billion shillings in total disbursed at the group level via the different ecosystem partners we have across the group. We also launched our Buy Now, Pay Later solution. You'll get a bit more detail on that from Gul a bit later. But you will see the ecosystem partnerships that we're looking at: payment services, digital lending, remittances, agri and retail tech, and e-commerce services. Now, turning to the financial contribution coming in from all the segments, I'm hoping that's not a bit of an eye test, but you will see the distribution over there coming from the corporate and institutional banking, retail and business banking, and the other income lines, which include rental, treasury income, and the income coming in from non-banking subsidiaries. So corporate at 38%, showing a slight decline, and retail and business banking moving up from 49% to 52%, the other income remaining flat at 10%. So it shows that despite the actual growth in absolute numbers, you are seeing also the focus on the retail and business banking side really contributing to a greater share of the pie. So we have, I mentioned the areas that we are focusing on investing in. I'll just highlight on the digitization side, we have over 81,000 accounts that have been opened digitally. 50% of our new-to-bank accounts were actually opened through our digital channels, which is very commendable. And if you look at the average monthly active users, that's over 104,000. That goes up over 335%. The number of retail digital transactions at 3.5 million, also up 73%. And if you look at the digitally active customers, which I mentioned was 83%, up from 78%. Now, that is great to see, because it also then means that we are seeing a greater contribution of revenue coming from our digital channels. And it was up 163% from 2023 to Kenya shillings 1.2 billion. Another area we're investing in are people. I mentioned the increase in staff, and 15% growth in the workforce. That reflects the focus on the distribution channels, but also making sure we're investing in the skills that are needed to really penetrate in these new areas. So one key area to highlight is our overall gender diversity. You will see that in just 1 year, we flipped the ratios, and women are actually more than men in the organization. And that has also been complemented at the senior level, with 40% of our leaders now being women. We are continuing the efforts to make sure that our employees are highly engaged, and at 78%, that's very commendable. And we want to continue that focus. In terms of training, of course, that remains a key focus in upskilling our teams. The world's moving pretty fast. We need to make sure people are equipped with the right skills. So the average training days per employee at just under 5 days. The other area we've invested in is our brand. And last year, we celebrated 50 years of I&M Bank in Kenya. And about 5% of our total operating expenses was focused on investing in the brand. This investment bore fruit. You can see that right from 2022 through to 2024, we've seen our spontaneous awareness score improving from 5% to 34%, which is quite amazing in just 2 years. In terms of net positive customer sentiment, compared to our industry peers, and you will see this expanded a bit further, at 72%, by far and away the leader in this space. Looking at how we are creating impact, we have been focusing on resource efficiency. We've talked about sustainability and how we are linking into the SDGs. And we're looking at what we can do within the organization, and also looking at how we support our customers to operate sustainably. So a 6% decrease in staff travel emissions. This, despite seeing the increase in numbers of staff, is actually quite commendable. We are looking at how we can reduce the amount of paper that we use within our organization, a 7% reduction, and how we treat our waste. So 94% of our total waste has been recycled, and this includes electronic waste, which we are purposefully dealing with as well. Now, in terms of making sure we have that uptime that we discussed, we need obviously clean power, but that's not at the expense of using fuel-driven generation. So that's a 26% reduction, and you will see in a number of our head offices we have got solar installations on our roofs, and that is helping to improve the energy mix and also improve stability. Enhancing quality of life, over 490,000 trees that we grew, not just planted, but grew, and focusing on education and skill development, over 641 scholarships given out at the secondary level, a key area of focus for us through our I&M Foundation, and over 1 billion shillings invested in different impact initiatives. This last picture here is just from a few days ago. We were out at Ngong Road Forest, which is our flagship environmental conservation event. We are investing over 162 million shillings in turning this into a sanctuary, making sure that we restore the forests. And this was formally launched by Cabinet Secretary Honorable Eden Duale just on Monday. And I'm sure that you will find yet another space that you can enjoy when you're looking to take your families out to enjoy nature. So we're proud to be doing that. Of course, we were very proud to be accompanied by our Chairman Emeritus, SBR Shah, who is on the right in that picture. This is a brag board. It has, we have limited the number of awards we could fit in this page so that you could see. So I'll see that some of them were not captured in other countries. We were the best bank in SME, for example, in Rwanda in 2024. But it just shows you the effort that's been going into brand building, but also into driving the customer experience and our transaction banking capability. So we're really proud of what our teams have been doing. And I will take this opportunity to really thank the board for all of the support they've been giving to the management as we look to deliver for our stakeholders. Also to thank our customers for all of the loyalty that you have shown, not just through the years, but also in a difficult operating environment in 2024. And of course, our staff for all of the hard work that they've put in to drive this. So I'll pause here and invite, want me to invite Gu? Yes. So thank you very much for listening to our rundown on the strategy. And I'll now invite our Kenya CEO, Gul Khan, to come and talk about Kenya in a bit more detail. Thank you very much.
Kihara's taller than me. Good morning, everyone. Good morning. Let me start a bit about the macros in 2024. I think, as we all know, 2024 was a tough year for Kenya in many ways. One, obviously, there was high interest rates, which obviously affected a lot of our customers. So not surprising, lending was subdued. Also, we saw a decline in GDP. On a real positive, inflation really came down, and the government and the Treasury and Central Bank did a really good job. You can see a big decline in inflation. And we obviously saw a big movement in the exchange rate in Q1 last year, where the Kenya shilling appreciated significantly. On the next slide, I'll just highlight the key financials for I&M Bank Kenya. So you can see we grew our revenue 16% year over year, and our profit before tax increased 17% year over year. Like I said, lending was very subdued to customers because interest rates being so high, especially with our large corporate customers and large business banking customers. And also on deposits, we had flat deposits overall, albeit we did have a change in our mix in low-cost deposits. Cost-income ratio, you can see, increased slightly. This was primarily because of our investment in our digital capabilities and also our branch expansion, which led to more staff. And next slide, please. Just to highlight our key segment performance, so our corporate banking and commercial banking. When I mean commercial, I'm talking about our top end of business banking customers, those who have turnovers above 250 million shillings. So we've saw really strong growth in this segment, 27% growth in revenue. What was really pleasing in this segment as well, I have to highlight, is that our customer base of large corporates and large commercial customers actually increased 22%, from 12,000 to over 14,000. What was also pleasing for the team was that we did actually increase our market share in trade finance. As Kihara said earlier, we've really cemented our position in the oil and gas sector in Kenya. So that's driven a lot of the growth we're having in our market share. But it's pleasing to see our market share in trade finance, which historically has been a strong pillar of I&M Bank, continues to grow. On the next slide, I'm just going to highlight here the retail and the SME segments of I&M Bank Kenya. Here, you will see a couple of interesting things. One is, despite overall lending in Kenya being subdued, our retail lending grew significantly. So we grew 18% lending to retail and SME customers, and our revenue grew 29%. So very strong growth coming out from our retail and our SME segment. Just go back, please, sorry. And on the right side, what you can see is we've had massive growth in our customer base in the last 2 years. We've actually doubled our customer base in 2 years in Kenya, and that's fueling this retail growth. So it's something which we're very happy to see. A lot more new customers coming to I&M Bank. A lot of new customers who probably didn't consider us before, historically, but now are considering I&M Bank, which is a big change. And also on the bottom, you can see a massive increase in our transaction volumes on digital. So a lot more customers are transacting with us. They're more sticky relationships, and this is a good sign for future financial growth. Next, please. In our other businesses, which are very important for share of wallet, wealth management, and bank assurance, you can see wealth management grew significantly. Our assets under management grew over 80% in 2024, and our number of customers using our wealth management services also increased significantly to over 200%. This is also very pleasing to see because obviously we want to be cross-selling more products to our retail and affluent customers. Bank assurance, our bank assurance business is doing really well. It grew 31% last year. And again, what's really pleasing is we have a lot more customers using our insurance services, which we had over 29% increase in customers. On brand, Kihara alluded to this earlier. There's been a significant investment in brand building. As Kihara said earlier as well, last year was a real milestone in I&M Bank's history, 50 years. So that was another reason why we invested more in brand building. And in 2 years, our spontaneous brand awareness score has gone from 5% to 34%, which in a short period is quite amazing. And just last year, we went from 20% to 34%. We've tried to launch products which we believe are relevant for everyday Kenyans. And as you know, our quite famous now, Nisare Kabisa, free bank to M-Pesa and free bank to Airtel Money for individuals and sole proprietors has really been a big hit and continues to be a big hit to grow fuel our new-to-bank customers. We launched at the end of 2024 our new card loyalty program, Milele Rewards. We do believe it's the best card loyalty program in Kenya. We're the only bank who's giving a one-to-one payout. So whatever points you've earned, you can cash out 100% of that, and you can redeem your points for cashback. You can redeem locally in Kenya at supermarkets, electronic stores, online shopping, as well as flights and hotels. And also from our digital team, very exciting and pleased to say that our short-term digital lending really took off in 2024. Again, this capability was built in-house, which again is very pleasing. But our short-term loan, the 30-day loan product that we're offering to retail and small business customers, gave us significant growth last year and is very exciting for our future. On the physical side, as Kihara alluded to, we continue to invest in branches. We opened 15 new branches. Happy to say now in 22 counties, and also what's pleasing is many of these counties and the towns we're going to where we didn't historically have a presence, we're seeing significant uptake from new customers, where other banks have been there for a while. So again, we think this is a good indicator that our products and services are positioning themselves well for the marketplace. And overall, we acquired 159,000 new customers in 2024. I just want to highlight this slide. One thing we track very closely is obviously consumer sentiment, right? Especially for our retail business. It typically is a strong correlation with brand health, consumer sentiment, and future revenues. And last year there was a third-party data EQ who looked at all the consumer sentiment of Kenyans on social media regarding banking and banks, and it was very pleasing to see we were recognized as the #1 bank for consumer sentiment on social media. And the other really positive thing for me and the team is that we've had, despite this massive growth in customers and transaction volumes, but still our customer experience levels have held up really high. You'll see on the right-hand side, our Net Promoter Score has continued to increase, and for 75%, that's a very high score for any retail business. I'll stop there. Thank you.
Just before our Group CFO comes on, I'd like to mention that for members of the press who have would like to, we're going to have a Q&A session, but if you'd like to have a one-on-one with any of our principals, then please reach out to my colleague Samantha, who's in the corner over there, or myself, and we'll be able to make that happen. Thank you. Karibu, Mr. David Ngata, Group CFO.
Thank you, Karaja, and good morning, everybody. So I'll take you through the subsidiary performance. And as Gul highlighted, we did see Kenya growing PBT 17%, growing operating income 16%, and that's a very strong growth. To grow that way and then seed the subsidiary contribution 4 percentage points, it does speak to how well our subsidiaries outside of Kenya have grown. So I guess I have the best of jobs this morning to be able to cover that highlight. So I'll dive right in and give you, for each of the subsidiaries, just an economic overview. But one overarching theme for East Africa is that in the Africa region, this is the one region that has the highest percentage rate of growth. And it has been consistent 2024, 2023, I think over the last 3 years. Then the second thing, as we try to understand the results of the subsidiary, is that we have to recognize Kenya shilling was the best performing currency, appreciating 17% year on year. So the results that we're going to show you here, it's those subsidiaries then reporting and swimming against a currency that appreciating 17%. So for Tanzania, again, being in East Africa, one of the few countries where the GDP growth was over 5%, credit penetration was growing 17%, moderate inflation. We are seeing their inflation between 2 and 3%. And then interest rates are fairly stable, with the Bank of Tanzania increasing that rate 5 to 6% during the year to address the inflationary concerns. So how well did we do then in Tanzania? We did see our income growing 49% on Kenya shilling basis. And that is on top of the Kenya shilling, as I said, appreciating. We did see our profit growing 2.5 times, from 300 million to 1 billion, profit before tax. And then, yes, we are showing their growth in terms of loans and customer deposits. This is because of the currency fluctuation, the 17% growth appreciation that I spoke to. Then moving on to Rwanda. Rwanda seems to be the only country within the region where the inflation was a little bit above, at 6%, compared to the other countries. But Rwanda enjoyed tremendous GDP growth, 9%. And then the Rwanda currency did depreciate about 10% during the year. And we did, to support the 9% growth, we did have the Rwanda Central Bank easing the rates a little bit. And moving on then, how is it that we performed in Rwanda? 27% growth in operating income, 57% growth in profit before tax to 2.9 billion. And then 14% growth in loans and advances in local currency, 49% growth in deposits in local currency. Although, again, when we translate that, it does come to the 12% that I'm showing there and the 15% that we show there. Then to also point out, for Rwanda, one of the things I'd like us to pay attention to is a return on equity. Now, 21%, increasing 50% during the year. And cost to income for the subsidiary, again, increasing from 62% to 51%. And that we have achieved that return on equity when we still have continued to maintain our cost of risk, which has grown from 1.4 to 2 percentage points. So very strong results in Rwanda coming from our net interest income and our growth in non-funded income. Similar thing for Tanzania, and actually going back two steps back, for Tanzania we did have return on equity increasing from 5 percentage point to 13.6 percentage point. And similarly, when again we have maintained provisioning cost of risk close to 5%. And one thing again for Tanzania is what has happened to our cost to income ratio, now at 55%. And gross NPL at 8.4%. So tremendous improvement in our loan portfolio there. So then Uganda, stable currency. Yes, the currency depreciated first quarter of last year, then retraced that depreciation for the rest of the 9 months. Inflation again, this part of the world, inflation 3.3% to close the year. We did see GDP growing up until third quarter, 6.7%, and that is expected to continue. So again, very well poised, and as a group, we are very proud in the economies that we are operating in. Again, you look at the projections for Uganda for next year and 2026. 12% GDP projection in 2026. So very well poised and happy about where our businesses are operating from. So how did we perform then in Uganda? Profit before tax, 78% growth, from 400 to 800, 750 or so. That's why it's 78% growth. Operating income, 29%. Then loans and advances, we grew that interest earning asset 16%. In local currency, grew 37%. Deposit, yes, we are showing decline there, but in Uganda shilling basis, that is a growth of 10%. And then you're seeing a 3 percentage point increase in our return on equity for Uganda. We are showing, again, cost to income, the trajectory continues to face the right direction, moving from 90% in 2022 to 78% now. Okay. Then Mauritius, which is our joint venture, again, 6.3% GDP growth. Favorable inflation, about 3%. 3%. Mauritius, the challenge has been, I think 3 weeks ago or so, you may see the weather and climate in our region is changing, so they got buffeted last year a couple of times. And similar to probably Kenya, they did have issues with their fiscal positioning, which led to a rating downgrade. But then again, we expect those problems to be overcome. There's a new government in place and they are addressing those concerns. So how did we perform in Mauritius? Our operating income increased by 5 percentage points. Yes, we did have a reduction in our profit before tax of 27 percentage points. Ideally, really that is all due to quality of the loan book there. We did have to take on about 500 million of loan provisioning there. When we look at our operating income, as I've shown there, positive, our expenses well maintained, growing in single digits, 7 percentage points, and therefore with the new repositioning of the economy, then we expecting our business there to continue to thrive. The net loans and advances, a decline of 4% in Kenya shilling term, and a customer deposit declining 18% in Kenya shilling term. And that reduction in our profit before tax, profit after tax, and our share of the JV income does lead to the decline in the return on equity there from 20% to 13%. So this is the only subsidiary where we didn't have our return on equity expanding. However, cost to income and the operating efficiency that I spoke to, we are showing that again, the right trajectory, improving from 67% 2 years ago to 60% where we closed for 2024. Okay. So that covers all of the subsidiaries. Then on a consolidated basis, how are we looking? Some of these numbers, you've seen them before. Our operating income, Kehara did, next slide. Kehara did speak to that. We did have a 20% growth from 42 billion, 42.7 to 51.2. Our profit before tax, and the number that I show there, that's a profit before tax, excluding the Bank One, which is a JV. So on there, we don't consolidate that. We only account for our 50% share of the PBT, of the profit after tax, sorry. Our profit before tax increasing 24% from 22 to 27, 27.7 billion. Profit before provisioning, before provisions. Our profit before tax increasing from 16.7 to 20.8 billion, another 25% growth. Provisions, 6.9 to 7.8. So we've achieved these results. We are still concerned about making sure that we are well provisioned on our loan portfolio for our NPL loans, given the difficult economic circumstances that the economy, especially the Kenyan economy, went through. Our cost to income ratio improving from 48 to 46% during the year. Cost of risk, as I've shown there, the provision increased from 6.9 to 7.8, so cost of risk ticking up 10 basis points to 2.6%. Our return on equity for the group improving from 15% to 17%. A whole 2 percentage point growth. Our return on asset, basically our balance sheet efficiency, again improving by 30 basis points from 2.6 to 2.9%. Then on the balance sheet side, fairly stable when we compare where we ended the year compared to last year. On total assets, 1 percentage point. As I've explained then, in Kenya, we do have foreign currency assets. So we had to translate those to Kenya shilling, an appreciating currency. All of our subsidiary assets, we had to translate those, facing an appreciating currency. That does explain that. And you see that theme carrying on to customer deposits, again, which marginally down 1 percentage point. Loans and advances down 8 percentage point. Now, I did speak to our level of provisioning, the fact that we took 7.8 billion provision expense during the year, which increased from 6.9 billion. But looking at our gross loans non-performing portfolio, marginal change, 35.3 billion last year to 35.5 billion this year in aggregate. Yes, our net non-performing loans does have an uptick from 11.4 to 12.4, so 1 percentage point uptick. But what I'd like to draw attention to is our net NPA. If you look at the table to your right, net NPA declining from 5 percentage point to 4.7 percentage point, which does show that the level of provisioning that we did take during the year, it's actually supporting, or it's actually to make sure that we are conservative enough to address NPAs as much as we are ramping up the collection effort and the recovery efforts. We have sufficient liquidity, good liquidity across all of our subsidiaries on an aggregate basis, 52% for the group. Our healthy capital buffers across all of our subsidiaries on an aggregate basis, total capital of 21%. I did speak to how we are standing liquidity-wise. This chart here shows then what that is for each of the subsidiaries, and you will see for all of the subsidiaries, we have enough buffers across the region. The minimum is 20%, and we have enough buffers holding high-quality liquid assets to be able to meet our liquidity ratios. Same thing for capital. Across the region, about 14.5, and all of our subsidiaries, again, they have enough headroom to support growth. Then summing it up, 2 slides, then earnings per share, 22% expansion from 7.6 to 9.3 per share. Book value per share, 53.4, expanding to 57.3. Dividend per share, Kihara did speak to that, increasing 45 cents from 2.55 per share last year to 3 shillings this year when you combine both the interim and the final dividend. And then the chart below there shows how our stock price has performed throughout the year. We started the year at 17.50, closed the year at 36.25. So if you owned our stock at the beginning of the year, you got 3 shillings dividend, that equates to about 17.5% return on just dividend return. Then if you take on the market appreciation of 107, we are talking of 125% return for the year 2024. So very strong reward to our shareholders. And then summing all those numbers up, just key messaging, 9 data points here where our revenue is, 20% growth, profit before tax, 25% growth, profit after tax, this is now including the JV, 24% growth. Yes, because of the appreciation on the currency dynamics, net loans and advances reducing 8%, deposit reducing 1 percentage point, cost of risk increasing 10 basis point, return on equity 2 percentage point expansion, return on assets 30 basis point expansion, and for the share for the dividend per share 45 cents expansion from 2.55 to 3 shillings per share. I think that's my last slide. I guess then we'll go to the next session. Thank you so much for listening to me. Thanks.
Don't get too comfortable, David. I'd like to welcome you back on stage and to be joined by Kihara Maina, Gulkan, and Gauri Gupta, who's our Group Executive General Manager for Corporate Advisory. So we're going into the Q&A section. Obviously, these gentlemen have done a very good job of presenting these results because we have no questions from our virtual audience. So either that or you just stand to silence by the wonderful results. So we'll take questions from the members of the press, the Fourth Estate, our financial analysts and researchers that are present in the room today. And we've got my colleagues. On one side of the room, there's Paul, who's got a microphone, and we have Izzy. Izzy's in the back there. So and you'll start by introducing yourself, what organization or media house you come from, and then we can take the question. Oh, we have a question there. Also, just so you know, this presentation is uploaded on our website in the Investor Relations section, and then also we will be sharing it with all of you present via email. Yep, please rise and you can give us your question. Simama, I know you're not shy, we know each other, come on.
Thank you very much, Mr. Karanja. Now, Mr. Kihara, thank you very much for a good presentation. And now I know why it has not been easy to get you, because you've been busy doing all the right things. Ditto goal. Mr. Kihara, you say that your brand recognition, spontaneous recognition, stands at 34%. Are you okay with that now? Or do we join you and push it to a better percentage? And what is your desired where do you decide to be in the near future? Mr. Goul, you say that in consumer sentiment, you are number one. What are these consumers telling you? And yourself, what is your desired customer experience? When I'm walking out of an I&M function, or even an I&M banking hall, or an I&M digital experience, what do you want me to feel? I mean, what is your desired customer experience for an I&M customer? David, your NPLs look very neat. They're pretty good. What's your secret, given the rather depressing scenario locally? Thank you very much.
You didn't introduce yourself.
Sorry there, my name is George Marenya from Business Insights. I mean, brand value is what keeps me awake at night.
And I also believe the question about brand awareness score, that is for Gul as well, so he'll also take that one.
Thank you. So on the first question on brand awareness, so this is really important for a retail business, right? You know, corporate is a very different business. So for any retail business, brand awareness is a very important position to move into, and also an indicator of what customers consider and their buying choices. So the fact in 2 years, our spontaneous brand awareness has gone from 5% in Kenya, because historically I&M Bank was, has been an excellent corporate and commercial bank, from 5% to 34%. I think is reflective of a couple of things. One is that we've launched relevant products and services, like I spoke earlier, especially with Nisare Kabisa, the free bank to M-Pesa, free bank to Airtel Money. So relevant products. And two, we have invested a lot more in marketing the brand, as you've seen in Kenya. And like I said again, last year would always be a special year for I&M, given it was 50-year anniversary. And we did there also again increase. So we're trying to get this score up now in the next 2-3 years, about 50%. That's a very positive place to be from where we come from, right? If we were, a bank which has been in retail for the last 20 years, 30 years, then our aspirations obviously would be much higher in the short term. But coming from 5% to 55% by the end of 2026, I think would be a great place to be. On the second question you said on what do we want our customers to experience, really we want to be known as the best bank for customer service in Kenya. I'll just leave it at that. If we can hold that space, we can dominate that space, I think everything else will follow. That consumer sentiment score that we shared, this was actually a third party called Data EQ. They did this survey. It's available on the internet, so you can have a look for yourself. What they did do was they looked at over 500 million social media posts by everyday Kenyans consumers on what they expected from banks, what they were happy with, what they disliked, and it was very pleasing to see that I&M Bank was given the highest score at 71%.
Right. Any other question from the room? Sorry, there was one.
I guess on the question on the NPL, I'm not sure if there's a secret. I think it's a question of is more doing the basics right. So it all starts from the underwriting, working with your customer, your credit monitoring. We have a fantastic team, both the frontline and the credit administration who do that work excellently. And really, therefore, we are able then to withstand the changing tides. And as I say, monitoring, I think our tagline is on your side. So really understanding what's paining, where a customer's shoe is pinching, and working with them to overcome those challenges. Thank you.
Also on the Data EQ ranking, I think it's important to note that we were leading by over 45 percentage points. So I think that's worthy of a round of applause. Any other questions? Anything coming in from our virtual audience? We've got our good friend Mr. Olo. Could we please have a microphone?
My name is Ochieng Olo, Think Business. First of all, I think good results, but I'm curious about one thing. Did I get it right about gender sensitivity? That you actually do have 66% women and 34% men working for I&M. I'm asking this, and so in light of the fact that there was a 6% change or shift in just 1 year. I think that is huge. It would be good to explain what happened. Did you fire all the men or what happened? Now, secondly, just looking broadly at I&M and your Imara 3.0 strategy, your aspiration or your plan to double your branch network. I had your Kenya CEO saying that you're now at 60 branches. You plan to be at 100 by 2026, if I got it right from elsewhere. Now, you've been a very strong corporate brand and done very well there. Might be not a lot of room for growth, although I've seen you've posted some growth even on that segment, which is good. So really the way to go is retail. I understand your pursuit to have 100 branches by 2026. I think the key thing somebody would be asking is, would that be happening at the expense of what you have built your brand to be over the years, which is corporate banking? And two, it's about growing your non-funded income, and I see from your different ecosystems, there's a lot of growth here. But it's clearly not going to be enough to get you to the point where you are saying that you want to be the leading financial brand in the market. So you're going to have to start looking outside for acquisitions or something like that. Is that something that the bank is thinking about? My other question is about oil and gas. And I think you've made a commitment just around the time of COP28 about raising some $100 million for green financing by 2026. At the same time, you're saying you're now the second leading player in the oil and gas market in the market. That's fossil fuel. I mean, if you're talking sustainability, that's something you should be thinking about reducing. Now, I want to know first the reason for that growth. Did you hive part of what KCB was doing, the G2G, fuel deal with the government? Where is that growth in oil and gas coming from? And then just a little explanation in terms of what you're looking at when you talk about sustainability, what are you looking at in terms of reducing fuel emissions and things like that? Because I know now there are certifications about sustainability. I don't know if you have any of them. There are global certifications. I can't remember one off the top of my head, but is there anything along those lines? Thank you.
Thank you very much, Ocheng. I think we'll start with Gauri Gupta, our Group Executive General Manager for Corporate Advisory, who also leads our sustainability function. She can speak to the gender parity for the group, and can also speak to the question about our sustainability action plan. But it's also good for you guys to know that we recently announced our commitment to the UNGC Forward Faster initiatives, which she can also speak a little more about. And then after that, we'll speak to, and she can also address the inorganic growth as she leads our M&A activities, sorry. And then from there, we'll take the next questions by Gul and Kehara.
Thank you, Karanja. Thank you for your question. Let me just address the gender diversity. So yes, we have flipped, as was pointed out by a regional CEO. This is as a result of some conscious initiatives in our recruitment policy. So you see an increase both in terms of the overall gender diversity, which has changed from 48-52 the previous year to 52-48. And the 6% increase that you're speaking to is about the increase in team management level. So yes, again, deliberate, conscious effort to make sure we bring that to acceptable and international standards. Again, one of the objectives that we are closely following under our Sustainability Action Plan. Moving on to your question, so under our Sustainability Action Plan, we've identified 3 key pillars that we are focusing on. And the ultimate objective is to make sure we impact more than 50 million lives by 2030. We are going to do this by, 1, enabling last mile finance. And, we've spoken about the ecosystem partnerships that are helping us achieve this. And here also we've identified specific segments, youth, MSME, agri-finance, and also green finance. Our second pillar is about making our own business operations sustainable. And this is where we talk about resource efficiency, we talk about gender diversity, and the whole segment on procurement practices, making sure the partners we work with also are conscious when it comes to some of these metrics. The third pillar is then about enhancing the quality of life, where we work in Kenya with I&M Foundation. In 2024, our flagship project was the Ngong Road Forest, which we launched just earlier this week. And again, this is where we are looking to really catalyze impact, working directly with our partners, but also other stakeholders to see how we can join hands with them to really improve the lives of the community around us. Let me now address your question on oil and gas. I think one of the things we need to appreciate is we are a developing economy. There is a lot more that we need to do to get the basics for our people. And while we are definitely looking at renewable energies and clean energy sources, it goes without saying that oil and gas or some of the fossil fuels continue to drive economic growth. And I think till such time, we will have to work. What we do to then make sure is that these are, they follow sustainable practices, and they are doing significant on, they are playing a significant role to really manage the CO2 emissions. I think that should answer. Was there anything else?
Mergers and acquisitions.
Again, this is something we are always looking at in terms of opportunities. Our overall aspiration is beyond just East Africa to Eastern Africa. So regional expansion is a key focus areas, but also looking at more product-driven acquisitions, whether it's fintechs, whether it's on financial services, wealth management, bank assurance, leasing. So, I mean, all these areas are something that are constantly on our radar. Thank you.
Goal, a branch expansion strategy.
Thank you. So on the branch expansion, the aspiration is for 100 because we feel that given the population size and given this huge density in a lot of towns in Kenya, commercial density, especially with small businesses, we all see that. And there's many places like that we were not in before, and we've gone there and we've seen tremendous traction from small businesses. I think David highlighted our growth in MSMEs has really increased. So that gives us confidence. The other thing with branch expansion is whether that 100 branches happens by the end of 2026 or it's slightly later or slightly earlier. It will just depend obviously on how much headwinds we have at times. The third point is we're trying to do it differently, the branch expansion. Many of the new branches we've opened have really, to Gauri's point, focusing on our sustainability agenda. We've opened several branches which are made from containers, end-of-life containers. Perhaps we don't make enough noise about this, but the end-of-life containers completely run on solar. Just now in Central Province, we've opened several of those. So I think, even when we're looking at doing things the traditional way of physical branches, we need to have that sustainability eye as well. The second point I'll just address is the point you said where historically we've been an excellent corporate bank, and now this shift into retail, we're going to lose focus on what our historical strength has been. So absolutely not. That's not the strategy. The strategy is to maintain our dominance in corporate banking. We're an excellent corporate bank. A lot of the manufacturers in Kenya have historically banked with us for many, many years, and many more. You saw the numbers. Our corporate and commercial customer base has increased 22% year over year. So we're still getting new customers in that space. However, with retail and digital expansion that we've invested a huge amount in our digital business. So our app, which is being recognized as the #1 app in Kenya, is being recognized on social media that our consumer sentiment is much higher than the other banks. It's really because of that digital investment we've made. So I'll urge all of you to please download the app if you haven't already. You can open an account online, and our customers are really enjoying that experience. So just a second point with retail is you have to scale, right? If you don't scale in retail, it's really a costly business. So we're on that journey where we're trying to scale up, but also build great brand health and customer experience. And I think where we are right now, we're in a very good space because our customer experience levels are very high, the brand of awareness is very high, consumer sentiment is high, and our technology stack is able to handle this massive growth in volumes, right, that we've had. I hope I've answered your question.
So maybe just to complement a couple of points. So on the sustainability side, just to point out that actually we are also deliberately looking at the ladies' composition at the board level, and we are targeting to be at least 30% across all of our different boards. On the oil and gas question, I think Gauri has really put it well. You can't just stop investing even in exploration in oil and gas. And we know, especially in one of our presence countries, in Uganda, that is something that's going on. We have to be relevant even in that space. But to complete your question, really, to answer the question that you asked on how we did in the oil and gas in Kenya, yes, indeed, when this started out, we were the second bank to get onto the G2G initiative. And it has really helped to cement our understanding of that space and make sure that we are really expanding what was our focus, our desired focus in that space. It helped complement our leadership in the trade finance space. We opened roughly 30% of the LCs that are opened in this country. And it just made sense to also complement that in the oil and gas space.
Thank you, Kihara, Gul, Gori. I'd also like to add to that. Our customers are subjected through our ESG risk function, subjected to IFC standards, the IFC ENS performance standards. So that's another way we try to mitigate those issues when it comes to sustainability. So oh yeah, we had a question from the lady there on the right.
Hi, my name is Isabel Chakairu from Sterling Capital. I believe my question has been partly answered, but let me just get more clarity. I'm assuming the EAG capital raise is to fund these projects, investments, etc., that you're talking about. But could you at least give more color on, the regional expansion? Like, where are you seeing opportunity? Which countries, etc.? Also on the investments, apart from digital, could you just give us like a list of where you intend to deploy that capital? Thank you.
That's an excellent question. I think Kihara and Gori would be able to sufficiently cover that.
I can start and maybe Kihara can complement. So yes, one of the reasons why we raised additional capital was to really support our regional growth strategy. A portion of that capital is earmarked to support subsidiaries, Tanzania, Uganda, and others that may come across in the future. Similarly, a portion is earmarked to fuel our inorganic growth. Branch expansion, digitization also continue to be key focus areas. So I think I'll just leave it at that.
Yes, so I don't know what to add. Just simply to say that we do appreciate that sometimes you get opportunities presented to you, but really for them to be seized properly, you also have to have the right mindset, the right focus on what you really want to, or you're inviting to be shown to you. So from a geographic expansion, we have already talked about the contiguous countries to our presence countries. We already see the kind of business that's being done by our businesses with our neighbors. And if the opportunity presents itself, certainly we'd be looking at some of those contiguous countries. But a key element that Gauri highlighted is that it's not just limited to geographic expansion. It's also looking at complementary businesses. And she had quite a list in that regard. I trust that has covered your question.
Gul mentioned we're not making enough noise about our container branches. I'd like to assure you that after we open our 63rd branch next week in Kakamega, which is a container branch, there'll be quite a lot of noise planned. So all of you just look out for that. I'd also like to point out that one of our female directors from the group board is here with us, Madam Rose Kinodia. Can just wave to the crowd. That's part of the strategy, part of the female leadership that we're talking about. So it's here, it's present, and it's real. Yeah, who's? Sorry? You'd like her to stand? She's right in front of you. Madam Rose Kinodia. All right, nothing else has come in from our virtual audience. I believe we are satisfied with everything that has been presented. Once again, we're going to send you this presentation via email. It's uploaded on our website in the investor relations section. Thank you very much for joining us today.
I think it would be good for those from I&M present, led by our group executive director, to just stand and be recognized. Our I&M staff.
Mr. Sarid Rajashah, Rocky Olonde.
Rajashah, group executive director. We've got Rocky Olonde, who is our group head of strategy. We've got Eunice Getama, who heads our digital business. Jamie Loden, who's our COO, Winnie Hunja, who's our Executive GM for Corporate, Henry Kirimania, who's our Group Treasurer. This man, be careful if you approach him. He's our Head of Credit, Group Head of Credit. And at the corner over there as well. Thank you.
Thank you, Kihara. I was actually going to call all directors and senior management to come on stage for a photo op, and then also to be joined by all members of staff while the rest of us break. Thank you, guys. If there are any other questions, I believe we've got some interviews scheduled, some one-on-ones with a few media houses. That'll be managed by myself, and my colleague Samantha will be doing that outside, past the food stations. So yeah, go and have yourselves a wonderful Wednesday. Oh yes, there's also still quite a bit of food, so please help yourselves and let's mingle and interact.